What's going on, guys? It's your favorite mortgage lender, Abdel Khawatmi, Paramount Residential Mortgage Group with Got Mortgages. What I want to talk about today is this word that keeps getting thrown around over the last couple months, and that's inflation, inflation, inflation. What we're going to dive into is really what's been set up over the last few months in reference to inflation. What are we expecting into next week in regards to the next Fed meeting? So what we've seen is that the inflation has actually started to cool down. The Fed has been hiking, obviously, their benchmark Fed rate. What that means is the overnight rate in regards to what banks borrow is not the same thing as mortgage rates. So far, we've seen respectively 25, 50, 75, and 75 basis point hikes in the March, May, June, and July meetings. There has been recent reports, again, as I mentioned, where the Fed's going to meet again next week. They should expect to actually jump up 75 basis points once again, September 20 to the 21st. Inflation is one of the main drivers in regards to interest rates. So the Fed rate hike can actually really be a good thing for interest rates in reference to mortgage rates because they really curve inflation. But the mortgage market actually last Thursday reacted negatively, which we really didn't see happening. Now, if the Fed, they do sound a little worried. They think that they're a little far behind curving inflation, which actually scares the market a little bit. But on the other hand, what we are seeing is that they do sound sometimes confident in regards to that they have a job at hand, inflation slowly getting under control. And really, we'll start seeing that the market should respond well to that. Now, however, there's really been a lot of different reasons that we believe that inflation will actually move lower later this year, as we've seen last month. The first thing is that the goods account for about 40% of the CPI, which is a Consumer Price Index report. And we've seen a big decline in many commodity prices that we've seen this peak. Lumber has actually dropped down 66%. Wheat has dropped down 44%, and copper has dropped down 30%. Big major indicators. What we're also going to see is inflation's calculated, remember guys, over a 12-month rolling basis. So what that means is we take the total of the last 12-month monthly inflation readings, and what we do is we take the average of that for a year-to-year rate. So example, last month in August, we saw that it was released just this week. It replaces the data for August 2021 in reference to that calculation of annual inflation. So inflation readings, obviously, after September of last year are slightly higher in comparisons. So if we slowly start seeing lower monthly readings this fall, that annual inflation rate should move lower, and we should hopefully start seeing the Fed slow down in reference to their hikes. Really out there right now, kind of going to keep monitoring what's going on. I'll continuously keep you guys updated, and we'll take it from there. Thanks for tuning in, guys, and I'll catch you guys next time.